Investors withdrawing from big banks this session. Heck, they've been doing it pretty much all year. Financials, the worst performing sector on the day, dropping nearly 2%. Wells Fargo, JP Morgan Chase, Citigroup down 2.5%, 3%. Dan, you've been and continue to point out the very weak sentiment around this group. Is there any sign that you see that it will turn?
I see no sign. And, this goes back to the conversation, Brian, that we had at the start of the show about interest rates. When you think about, there's some people who think it's un-American if you were to say that rates are going to stay low or possibly even go lower. I just don't see how they rise at any time soon. And I think the banks have been telling you that all year long. I like to look at JP Morgan, obviously best of breed here. I know some of the other panelists own this stock, and they have for a while. This stock is still down 30% from its all-time highs made on January 2nd. It has made a series of higher lows, but let me tell you, that rally that it just had from the July lows that it just failed at is half of what it had from the May lows to the June highs here. I just see waning momentum in these things. I do not see anything really building. And if rates go lower and they go back to that 51 bips or possibly the March 9th low of 31 bips, banks are going to go down hard with it. And I also think that they're just telling you a very different story. You have the winners on the pandemic on the side of just anything recurring, tech, cloud. But the banks, I think, are really reflective of what's going on Main Street here.
Yeah, they might be, Karen. I mean, listen, we know JP Morgan is a favorite of yours. I know you own the stock as well. It's held up better than most. I guess the idea is to buy low and sell high, or buy high and sell higher. Some point, these stocks maybe become a better value?
Well, I'm long them right now, so I think they're a good value right now. I think that sentiment is really bad. There's no question. You don't love seeing certainly not seeing Warren Buffett, decrease his stake in JP Morgan, although he was buying Bank of America. I think part of the reason banks were down today was that yield move, but the 10-year yield move. But I think that, people are really concerned with how bad the credit quality is going to be, how big the losses are going to be. I totally understand that. But I think they are also underestimating the power of these banks to continue reserving in a very big way and still make money, which will set them up well. I think, when we get to their next quarter's earnings and people start to look to 2021, I think that you will see banks do much better, because I think they're going to see that they're going to have their the balance sheet and the reserves for the losses.
Guy Adami, I'm going to quote the great Guy Adami to Guy Adami, which is that maybe Mr. Buffett's sale of Wells Fargo is less an indictment of the bank and more of a boost to Barrick Gold, which he ostensibly maybe not bought with the same money, but you get my point.
Yeah, listen, that's what I think it because I said it and you quoted it, so I must be right. I guess that's somewhat circular, but I think people are missing a pretty big story here. I mean, whether it was Warren Buffett did it himself or, some of the people on his team, and people will say, well, a Buffett foray into gold today is not the same as it would have been 5 or 6 years ago. I get all those arguments, but my sense is he signed off on this, and I think it's a pretty huge endorsement of what's going on and the fact that the world is awash in fiat currencies, and now Mr. Buffett and the people at Berkshire Hathaway see that, and they're putting their money to work in a Barrick Gold. I think speaks volumes as to what's going on. Again, not necessarily an indictment of the banks, more so an endorsement of what he's seeing. And I think people better wake up to see the fact that the gold market, although it had a rough couple of days last week, as did silver, I am of the belief this is just getting started, and Mr. Buffett is backing up those beliefs.
Tim, your take?
Yeah, I think what's really interesting here, I don't know if you have to connect his movement in banks and his trade here in gold, but Barrick, this kind of a move for Mr. Buffett, I think, is really important to understand. This is an improving balance sheet. It's been a long time since we've been able to talk about any miners in the world and say that actually they could be positive net cash at some point, but they've got $1.4 billion in net debt. They may do 1.7 in free cash flow in the next 12 months. They had $3.6 billion in debt a couple of years ago. Freeport Max, similar story, what we're seeing with a lower dollar. But again, if you look at what's going on with Barrick and what's going on with gold prices, depending on where you want to be, and if you read some of the notes on the street, at least they give you some scenario analysis. If you want to put a $2,200 price per ounce on gold, and then you throw in 8 times on Barrick, this is a $48 to $50 stock. I'm not sure you're supposed to do that here, but if you listen to what everyone else is saying and you see what's going on with gold prices, I think this makes sense. So again, it's a balance sheet play, it's a net free cash flow play, and then it's a hedge of sorts. I don't know that this is necessarily that banks are bad trade. I think it's independent of that.